So we're going to start with the income statement. The heading for the income statement. If you had all of the information to prepare all three of these statements, the income statement, the balance sheet, and the statement of stockholders' equity, which of them would you prepare first? Do you remember? Good. The income statement, why? Perfect. Good. You need the net income for the other parts, for the other statements. Now, in these transactions, because we have items that are missing from each of these statements, we're doing it in a different order because we're kind of having to solve for the the different variables. Okay. But normally speaking, you would take your information from your income statement to be able to apply it and put it into your statement of retained earnings, and then take the statement of retained earnings information and put it into your balance sheet. Okay? So, but let's plug in what we know. What do we know? What is the revenue for Patel? Oops, I'm sorry, I didn't finish my heading. What should I say is the rest of my heading? For the year ended December 31st, 2011. Okay, and then we have our revenues. What type of revenues? What type of revenues? Service revenues. Do we have any other revenues in this company? Do we have any others? No. Good. Okay. Then what do we have next? We had expenses.
Yes. Total expenses.
And then we had just a total for expenses. They made it simple for you. Okay.
We had just total expenses.
Right. And then that equals your net income or loss, and in this case it is a net income. So what did you come up with here? 4,700. Good. Okay. And then what do we have next? What's our next statement? Good. Patel Corporation, statement of retained earnings. And is this for the year ended December also? Okay. So what do we start off with here?
Retained earnings 2010.
Good. Okay, so right. Retained earnings. It's going to be essentially December 31st, 2010. Okay, because it's the ending balance from the previous period, which is, in this case, 0, because this is the first year of operation for this company. And then we're going to put here what? Right, our net income. And that is 4,700. And then we should have subtotal here. What's our subtotal then? 4,700, right? Not a tricky one, right? And then, do we have any dividends? Did they say we had dividends? Okay. So less any dividends. What's the dividends? Yeah. I don't know. I honestly don't know for that. I mean, I don't know. Instead of like plus net income, less dividends. I guess maybe because the net income could be a plus or a minus, and you have to just know that. If it's a loss, it would be right. I would, yes. Yes. Okay. And then you would have your ending retained earnings as of December 31st, 2011. And that was what? Good. Okay. Perfect. Then what? We have our balance sheet. Oops. Okay. And that is as of the specific date, correct? And what do we have on the left side? What do we have on the left side? And what's on the right side? Okay, and then we have cash, and then we have other assets. Cash is how much? And other assets? Okay, and then bring it all the way down here. Total assets. Okay, 5,780. On the other side, we have liabilities. What are our liabilities? Only accounts payable. How much? And then we have our stockholders' equity. And we have here, what did they say? Common stock of 4,000? Oh, sorry. 1,000. And then retained earnings of 3,880. Okay, and then we have our total stockholders' equity. I'm going to abbreviate. Total stockholders' equity of 4,880. And then our total liabilities plus stockholders' equity equals 5,780. So they both balance. That's that. Any questions? Can you guys do that? Yes, no? Comfortable, not comfortable? Show of hands. 5s means I'm pretty comfortable with this. All right. 2? 2?
No, that's still 3.
Oh, Dylan, stop it.
We do these in Applet and print them out. Do we have to write them in the packet?
All right, start with what you know. Start with your knowns, okay? That's what you need to do. Start with your knowns.
1 and an 8.
No, it's not.
222,500. Sorry. So sorry. You're right. I'm wrong. Sorry. So sorry.
Can you leave out the zeros when we're writing all this?
Yeah, well, this one you can't because of...
Oh.
Is that 26?
So it's 222500.
So it's 26,500. Right. So what formula? Okay. So this is the formula you need to figure out the net income. So what's your unknown variable? Net profit or net loss? You know the change is going to be 26,500. Okay? But now you don't know whether this 26,500 is all net profit. You don't know if there's any contributed capital, and you don't know if there's any dividends. That's what they're giving you in each of the scenarios. So in the first scenario, they're saying, so in scenario number 1, I'll walk you through scenario number 1. In scenario number 1, it says, the stockholders made no investment in the business and no dividends were paid during the year. So if I know my beginning stockholders' equity is 222,500, and I know that there are no additional paid-in capital, there are no dividends, and I know that my ending stockholders' equity is 249,000. What am I doing? I'm solving for this. I'm solving for net profit. It's always asking me, what am I solving for? I'm solving for net profit. So when I do the math here, X is going to equal the whole change, 26,000, 26,500. So net income in this scenario, net income is 26,500.
Now I get it.
Okay? So all you're doing for each of the scenarios is you're plugging the knowns into the formula. You should have gotten 81,500. So you started with 225, 222,500. We don't know net profit. Do we have any contributed capital?
That's what I always do.
No. And we had a $55,000 dividend. Oops, not a $55 million dividend. All right, $55,000 dividend. Our ending is 249 still.
You look like a Russian.
X equals 160. Oops, my bad. X plus 167.5 equals 249. When we isolate it, and X is on the same side, we get 81,500. So this is our net income. What'd you get using the same approach? 222,500 plus X. What's the contributed capital in the third one? Is there contributed capital? 32,500. Is there any dividends? No. Equals 249. When we do it at the end of the day, X equals minus 6. Negative. So it's a net loss. Last one, 4. 222,500. What do we have for dividends? Or pardon me, we had investment of what? And dividends of 5,800? 58,000. Okay, and then X equals how much? 59,500. Okay, good. All right, so the next problem, E13, was to do the cash flow. E13, Primors Corporation began the year 2011 with cash of $27,950. In addition to earning a net income of $19,000 and paying cash dividends of $97.50, Primors borrowed $39,000 from the bank and purchased equipment of $62,500. They also had an increase in accounts receivable of $3,900 and accounts payable increased $58.50. Determine the cash flow on hand at December 31st by preparing a statement of cash flows. Use the example on page 119. So, if you, on page 19. If you look on page 19, if you remember when we were doing the notes for chapter 1, I said the cash flow statement consists of 3 different sections. There's the operations, there's the financing, and then there's the investing sections of the cash flow statement. So it's looking at and trying to determine where does the business get cash from or use cash during the year. Okay, so if you have an increase in your assets, is that a source or a use of your cash? It's a use of your cash, because if you think about it, if you go out and you buy this cell phone, if I go out and buy this cell phone, I have now a cell phone asset on my balance sheet. Did I increase my cash or use my cash to do that? I used it. So buying this asset going up is a use of my cash. If I go out and borrow money from the bank, so that increases my liabilities. Is that a source or a use of my cash?
Use.
It's a source. Okay?
So sources go on the left, uses on
No, not source and use on the left. It's a source or use of cash. So if I go out and borrow money, I'm getting that as a source of my cash. So an increase in my liabilities is a source of cash. Okay, because I haven't paid it back yet. When I pay down my liabilities, that's a use of my cash. Okay? So that's what we're looking at on the cash flow statement. So when we look at this problem, E12, E13, we're trying to evaluate where our cash came from and where our cash went to. So we start out, we put our heading, Primorsk Corporation, Statement of Cash Flows for the year ended 12/31/2011. So they had net income, they said, of $19,000. And then we're adjusting our net income based on our operating, our investing, and our financing activities. So first, our operating activities. Accounts receivable, it increased by $3,900. So that's going to be a use of cash of $3,900. Our accounts payable is an increase in a liability, so that's going to be a source of cash. So our total is $1,950, a positive $1,950. Say what your question is, Nick. Go ahead.
How come a liability is a source?
Okay, so if you borrowed, if you said, Mr. McGrath, I want to borrow $5,000 from you. Okay? No, right now I gave you $5,000. Do you have $5,000 more?
Yeah.
Okay, so that's a source of cash. You haven't paid me back yet. So when you increase your liabilities, when you increase your debt, it's a source of cash. Now, give me my money back. Okay, now, did your cash go down?
Yeah.
Okay, so that's a use. So when you pay your liabilities back, when your liabilities go down, it's a use of your cash. Okay, so that's how that whole thing works. Yes, Jimmy?
Wait, so how are you organizing it then? Like,
You're always going to, okay, so you're always going to organize your cash flow statement based on your operating activities first, your investing activities second, and your financing activities third. So for each category, whatever goes into the operating activities is stuff that normally goes on in the business. And again, I think I outlined it in your notes and it's in your textbook. Your daily operating activities, you're going to evaluate your increases in your assets are going to be uses, okay? And so you're going to put the individual items on the left and your totals on the right, okay? So increased accounts receivable at $3,900 and increased accounts payable by $5,850. So then we had equipment of $62,500 rather, and that was an increase, so that's going to be a use of cash. So we're going to put the total here, use. So cash flow from financing activities was we borrowed money from the bank, so that's going to be $39,000. We borrowed money, that's going to be a source. And we paid dividends, $9,750, that's going to be a use. So we have a net cash flow from financing activities of $29,250. So when we add this all up, this is a plus, this is a minus, this is a plus. Our net change is a minus of $12,300, and then our beginning cash was $27,950, they said, and our ending cash would then be $15,650.
How'd you get that 12,300?
I'm just taking this, this, and this.
Yeah.
So it's going to be plus 950, minus 62,500, and plus 29,250. Okay.